p.m.
Thanks, Tony. Some sobering news for resources firms today, with PwC calculating the industry has suffered $200 billion in impairment charges over 5 years. That means most of the value created in the last boom has now been written off by the majors. Despite the gloom around the industry, there are some signs the next boom may have started. Commodity prices have recovered from their February lows, share prices have surged, and investors are throwing money at previously unloved explorers. Neal Woolrich reports.
For many in the resources industry, the great mining boom of the 2000s is a distant memory, but hopes are high that the next upswing has already begun. The Managing Director of Impact Minerals, Dr. Mike Jones, is one of those trying to strike it big.
We've got money in the bank, we've got an active drill program, it looks like we're getting some good initial results, and it doesn't get better than that until you drill the big one. Impact
Minerals is a small explorer with projects near Broken Hill and Dubbo that are showing early promise. Andrew Forrest is a major shareholder, and the company recently raised nearly $2 million from investors without breaking a sweat. While resources stocks have been battered and bruised for the past 5 years, Mike Jones says optimism is starting to return, especially among mining minnows.
Our office is in West Perth, and there's been a definite change in the walk of people in the street just in the last 2 to 3 months. Most of us are out there, we're genuine explorers. We've been struggling to survive over the last few years, and now money and life is coming back into the business. It's good for everybody, and let's hope it continues.
And there are tangible signs on the market as well. The Australian Materials Index has gained 30% from its February lows, capital raisings have increased, and now companies are preparing to list on the stock exchange. Hedley Widdup is a fund manager with Lion Selection Group who invests in mining stocks.
We have a lot of evidence now to suggest that the IPO market is opening, so there is several deals which are in the wings, and the quality of them looks quite encouraging as well. They're not just a listing of an explorer, they're listings of things which look like quite reasonable mining businesses.
Hedley Widdup says graphite and lithium have been resources to watch as they both supply the growing battery industry. But gold has been the standout, with shares in local producers surging 60% this year.
There are a lot of companies, there is a lot of gold which is mined and sold, and gold enjoys fabulous margins at the moment. It was one of the first to collapse of all the commodities to fall, so there are close on 50% margins in some producers at the moment, which is unheard of on a 15 to 20 year time frame.
And he says even though most commodity markets remain oversupplied, there's still an appetite for new discoveries. But Australia's two biggest exports, iron ore and coal, remain in a funk. While export volumes have increased significantly, prices for both companies and the underlying commodities look to be stuck near post-boom lows. George Boubouras is the Chief Investment Officer of Contango Asset Management.
To have a sustainable price rise in iron ore from current levels, given that global growth is quite subdued, is an unrealistic expectation. So an iron ore price between $45 and $60 seems quite a reasonable broad range for the foreseeable future.
Impact Minerals' Mike Jones says it's a decision they may regret. Whether this is the start of a new mining boom is yet to be seen, but whatever happens, the next boom won't be anywhere near as big as the last one.
Neal Woolrich with that report.